Live for November 30th, 2022. We're back. Man, we've been gone for a long time. So I am your host, David Michalek. I'm a consumer credit expert with 10 years experience, and with me is America's favorite credit expert, John Ulzheimer, formerly with Equifax and FICO. John, it's good to finally like there's a whole group of us, you and me to be back here together. And
Yeah, agreed. I missed you. We've been gone so long that you missed my 31st anniversary in the credit industry.
Oh,
So
wow. So
thanks.
when is your anniversary?
So Thanksgiving. I got hired at
Really?
Equifax in 1991, the week before Thanksgiving, or either the week of or the week before Thanksgiving,
Oh,
uh,
cool.
in in 1991. So I know every year when it hits Thanksgiving,
That's easy.
it's my anniversary.
Well, so yeah, yours is many years and a month after mine. So my 10 year is October. I think October 12th or something like that.
All right.
All right, here we go. So hey, got somebody BMLYFE. What's up, fellas? Good to have you here. So I was talking to John earlier today, while emailing John earlier today. I'm like, I don't know what to expect. We've been out of the loop for 6 weeks now, um, between travel and just other things. So I don't know if we're gonna have a big group tonight, small group tonight, but doesn't matter. We're gonna have a good time talking about credit and improving your credit and how scores work. And feel free to jump in and ask questions. The only questions that we really don't answer on our lives that we do with John is we don't go into like credit repair tactics. That's not really what this live is for. This is more about how does credit work, how do scores work, anything that's credit related that has to do with just understanding credit. That's what we're going to talk about. So John, it was all too familiar this morning when I sent you that email back. And I said, it's getting to be that time of year. It's getting to be that time of year where people's scores start dropping. People start doing all kinds of things that can really affect what their credit scores and their overall credit profile looks like for the following year. So I figured let's touch on this subject one more time. Talk about what kinds of mistakes that people tend to make this time of year when they're shopping. Maybe some things, some offers that they may or may not want to consider, and why, and what the ramifications are for that. And then we'll see where the questions take us.
Sure. Yeah. So this is the time of the year where people tend to lose their minds and forget about budgets and smart spending habits. And I think I read that Black Friday, the day after Thanksgiving, shopping set a record, which is actually
Mm,
great for merchants. And of course, we had Cyber Monday earlier this week.
yeah.
Um, so it's interesting. The what tends to happen in late November and throughout December, and to some extent into January, is the amount of spending that we tend to do on our credit cards goes up. Um, and what that means from a credit reporting perspective is once your statements have been cut by your card issuer, which happens once every roughly 30 days, that's your statement cycle for your credit cards. Once your statement is cut, then your credit card issuers are going to furnish that information to the credit reporting agencies. And so even though people spent a whole lot of money this past Friday and this past Monday, it's credit reporting is not real time. It's not dynamic, meaning that when you swipe your
Yeah.
card, it doesn't automatically update your
Mm.
credit report. Although that would be very cool, but we do not live in that credit reporting environment as of now. So what that means is sometime in late December and then again in late January, consumers are going to start getting their credit card statements for spending that took place in November and in December. And the balances on their credit reports are going to go up, which means that the utilization ratios of their credit cards is also going to go up. What also happens, David, around this time of the year is merchants tend to get really aggressive, especially for in-store shoppers,
Hmm.
and try to offer them some sort of a discount at the register, like 10% off, 15% off your purchases if you'll open a new retail store credit card. And so that sounds very enticing, right? Because especially if you're spending a lot of money on your purchases, 10 or 15% off, that's not chump change. The problem is I've kind of called that an unsophisticated use of your credit report. It's almost like you're using your credit report as a Groupon. And that's not really what it was designed for. And so what could possibly happen if you do that is, number one, is you can load up one or more of your credit reports with retail store inquiries, which are not good. Number two, if you actually are approved, which I hope you are, if you apply for them, I hope you are approved. If you are approved for those cards, then eventually those credit card accounts are going to end up on your credit reports. And then number three is if you've charged a large amount or a large percentage of the credit limits on those cards. And remember, retail store credit cards have notoriously low credit limits. And so even modest shopping can lead to heavily leveraged credit cards. And so when you add those three things together, none of that stuff is good for your credit scores. Hard inquiries from retail card issuers, low credit limits and balances that chew up too much of it. And then finally, the new account openings, which lowers the average age of your credit report, of the accounts on your credit report. None of that stuff is good for your credit scores. And so it should not come at, oh, and by the way, you also, if you're using pre-existing cards, like my wife thinks that she has to use her retail store cards to buy things during December. You can't use a Visa for everything. You have to use your Gap card at the Gap. You have to use your Ann Taylor card at Ann Taylor. So she ends up with what I call nuisance balances all over her credit reports, right? Small balances, but across multiple credit cards. And so when you take all those things and you throw them together, it shouldn't come as a surprise that sometime in January, if you were to pull your credit scores and compare them to what they were prior, meaning in this year, you shouldn't be surprised if they go down. And the reason they're going to go down is because of the various metrics that consider things like inquiries, balance to limit ratios, and then the number of accounts with balances.
John, I'm still stuck on the fact that the wife of one of the most recognized credit experts in the country is still using store cards. I mean, how many years together have you had to have this conversation?
No, I don't have it with her because her scores are actually higher than mine.
Oh, are they
so
really?
I just kind of keep my mouth shut about that issue. And look, we're not talking about a meaningful amount, but
I know. I'm just busting your chops though, because it is funny.
She was always the responsible one. I married up. They talk about, did you marry up or did you marry down? She married down. I married up. She was clearly the responsible, and she's not here, so it's not like she can hear me saying this. So she didn't. Her dad was actually uber responsible financially, and so it comes as no surprise that I'm married into a family that understood how to manage their credit.
Yeah, that's. Can you imagine what things would be like if I'm trying to think back on all the credit and money education I got growing up, and it's pretty much, if I put it all together, it amounts to zero. So it would be phenomenal if all of us came into some kind of a situation where we were exposed to people who had money education and had credit education, because that was not really a thing when I was growing up. Those were few and far between.
It's still not a thing.
Still not a thing.
It's still not a thing. I mean, you can learn how to disassemble and reassemble an engine on YouTube, but you can't learn how to manage your credit on YouTube. So it's still not a thing. You're stuck with me and David if you want to learn how to manage your credit properly.
We got a good question from BML. It's not really a credit repair question, but it's related to So it says, hey, my name. Oh, so Bobby, is it okay if you can't answer this question? You know what? We can answer this question. However, if I was able to get a negative item removed from one bureau, does that mean it has to be removed from the other two? That's a nice nuanced question with a couple little twists and turns. So
it's a fantastic question. And Bobby, just let me, and for everyone else who's watching, I know we've got probably some new folks. So don't get angry at David because I can't answer credit repair questions. It's not a David problem. It's a John problem. So I live in Georgia where credit repair is illegal. And a lot of my work is with credit bureaus and lenders. And so I have to be very careful not to cross that line between being an educational resource and being a credit repair resource. And so this is not a David problem. I do this with all of the presentations that I make. I can't answer questions like, how do you get a collection deleted, and how can I get all my inquiries removed, and how should I word this letter to get this deleted? So those are the types of questions that I can't answer. But your question, Bobby, is not one of those questions. It's actually a very good question. So there's a limited number of reasons why a credit reporting agency would remove something from a credit report. Normally, it's because the furnisher, the company that sent them the information, has asked them to remove it. So they have affirmatively asked the credit bureau to delete it. That's number one. Number two is if you challenge something on one of your credit reports and they send a dispute form to the furnishing party and they never get a response, then the credit bureau will remove it because it is now unverifiable. And of course, the FCRA requires that information not only be accurate, but that it also be verifiable. So if it's not accurate, or if it's not verifiable, or if the furnisher has asked that it be removed, that's why it will be removed. You'll notice the one thing I left out, which is really kind of the heart of your question. A credit bureau does not have to remove something because another credit bureau chose to remove something. So it does kind of question what happened here. Why is there inconsistency with respect to the responses that I got? Because I'm assuming that if you challenge something with one bureau, maybe you challenged it with the other two, and were able to get it removed with one bureau, but you were not able to get it removed with the other two bureaus. Let me also tell you, you may not be aware of this. Let me tell you also what happened kind of procedurally when that one credit bureau did remove the item from your credit report. They actually, assuming that you went through the normal consumer dispute process where you file a dispute with the credit bureau sends a dispute form to the furnisher, the furnisher performs their investigation and then responds to the bureau and asks them to delete the item for whatever reason. If that's what happened, then that credit reporting agency will carbon copy the other two credit bureaus on their actions to remove something. So even though one bureau deleted it and the other two bureaus didn't delete it, the other two bureaus are aware that one of the bureaus did in fact delete it. So there's this process in the industry called carbon copy, which is where if something is removed through the investigation process, that the other bureaus are notified as well. So there has to be some plausible explanation as to why the other two bureaus chose to maintain it. Now, I've been around long enough to see consumers take the results from one investigation interaction and then send that to the other two bureaus as part of their dispute letters. Hey, look, Equifax, I was able to get this deleted from TransUnion. Can you please delete it too? Whether or not they will honor that request, that's not in the FCRA. It's not a reason to remove it. So I don't know that would be successful or not. You can certainly try it. It wouldn't hurt.
And nothing about that in the credit reporting resource guide either, that I imagine.
Yeah, so the credit reporting resource guide does not set the procedures for dispute resolution. The credit reporting resource guide sets the procedures for just your normal organic monthly furnishing of information. Yeah. So there's nothing in that guide that says, hey, the next 10 pages are how to respond to ACDVs, or the next 10 pages are how to respond to carbon copies. That's not really, there's an eOscar user manual. Now that's where you're going to see those types of things. And of course, all furnishers, reputable furnishers will have their own well built out policies and procedures as it pertains to, what they do in the cases of disputed accuracy.
So the whole time, Bobby, John's talking about what we would refer to as an indirect dispute. So if this was, say, a direct dispute, just for coming up with something as an example, let's say I were to dispute a collection that is clearly not mine, and I were to dispute that directly with the collection company, and the collection company determines that, hey, we got the wrong guy, or this is not, this is not a legitimate claim against this individual, then typically what you see is if that if that collection company was reporting to all three bureaus, then typically they notify all three bureaus to remove that item for that reason. Um, but again, we're talking about direct dispute versus indirect dispute.
Yeah, and
Largely, that operates that way. Would you say, John?
yeah, no, you nailed it, and it's interesting. So let's can we unpack direct and indirect for a little bit more?
Yeah, please
It's
do.
actually it's actually a little bit counterintuitive. So when you contact a credit bureau and dispute something, that's called an indirect dispute, which is funny because if you listen to any plaintiff's lawyers who practice credit related law, they will always tell you to contact the credit bureaus because they want to sue the credit bureaus. They don't want you to circumvent.
It's an additional defendant.
That's right. It's yet another defendant. That's right. And so, yeah, that's referred to as an indirect dispute because you're disputing something on your credit report with a company, and when you go through a bureau, the bureau is communicating that dispute to the furnishing. That's why it's called indirect. And so the rules, I guess the FCRA rules about those types of disputes are different than the rules with respect to direct disputes, which are ones where you skip the credit bureaus and you go directly to the bank or directly to the credit union or directly to the debt collector. There's you may or may not have a private right of action, which is, in other words, your ability to sue someone in a direct dispute scenario versus an indirect dispute scenario where you do have a private right of action. And in there's different obligations to mark things as being in dispute depending on who you contact. So really all you're doing as a consumer is you're putting one address on an envelope versus a different address on an envelope. But really, once you mail that letter, it kind of opens up. There are two very different paths that are tread when you do those types of disputes, direct versus indirect. They should be equally successful because ultimately it is the furnishing party is the one who does the investigation because they're the ones with whom you have the relationship. I mean, Equifax doesn't know if you paid your bills late. Equifax doesn't know what your balance is. They only know all that stuff because the bank told them. And so, the bureaus have to reasonably rely upon those furnishing parties to direct them with respect to what to do. And so in a direct dispute or an indirect dispute, the results really should be the same because the work order, if you will, is coming from the same place.
Yeah. One of the things too, John, I think the benefits that people sometimes get is and this does happen from time to time, is a non-responsive furnisher. Like, what if it's some mom and pop collection company somewhere that does a small volume and maybe not as detail oriented as they should be, and they don't respond to your dispute or they blow you off or whatever. At least with an indirect dispute, you can largely count on the bureau to remove the item if there's no response from the data furnisher.
Yeah, they have to. It has to be verifiable, and so
Yeah.
it could be 100% correct. I actually was having this discussion earlier today with a lawyer about what does that mean? What does that mean with if it's correct? Then they don't have to remove it, right? I'm like, it's not that simple.
Yeah.
I can say, David is 45 years old. Okay, well, and that might be accurate, but I don't know. I don't have a copy of your driver's license. I don't have your birth certificate. I don't have any. Again, it may be correct, but I have no way to verify that, and so therefore, it's really hearsay at that point. So that's why the consumer has the right to verifiable information in addition to accurate information.
Right. No, that's a big thing, and if we're going to be completely open book and honest, anytime people go through or a part of the dispute process, and hey, there are things that are completely real and legit that get deleted, and they get deleted because it's not right. It's deleted because the data furnisher, for whatever reason, wasn't able to verify the data.
That's
Happens.
right.
Happens a lot.
And
In fact,
and
I've told people, like, hey, listen, I'm happy to explain how this stuff works. If you really want to know, it really falls under 4 categories: incomplete, outdated, unverifiable, or what's the other one?
misleading.
Erroneous.
Misleading.
Misleading. Yeah.
Yeah.
So So really, if you were to follow the data, if you could get access to it, what we suspect, just looking at the tons of data that we get, largely this stuff is getting deleted because it's just not being verified.
Yeah.
Yeah. Now I can't speak to whether or not it's accurate. I mean, I don't know that. We have hundreds of thousands of credit reports that come through here, so I don't know, but we can
Now,
certainly see
now,
what's good.
now remember, and I think there's a follow-up question in the chat room about something like this, but if something, all right, let me give you a scenario. So John disputes a late payment on an auto loan, and 30 days later, the credit bureau still hasn't gotten a response from the auto lender. They're going to delete the whole account because the account's not verifiable. They didn't hear. So that's a little bit of a nuclear reaction to what I think was more of a surgical, but whatever. That's what happens. It's removed because it's not verifiable. But let's just say hypothetically a week later, the bank finally gets around to my particular dispute and looks it up and indicates, oh, no, he was late. And they send that information to the credit bureau. The credit bureaus are going to reinsert it right back onto your credit reports. That is entirely legal. There is no law that prevents anything accurate and verifiable from being reported unless it meets certain deadlines as far as the 7 to 10 year rules go. Right. But if it's within those timeframes and it's correct, just because it was removed on Tuesday doesn't mean that it can't be reinserted on Wednesday.
Right. So Isaiah, that was really pointed at you.
Yep.
So John found a way to weave that one in for you. So, hey, do we have any advice for dealing with that situation? I mean, if you see something about that account that, if it's unresolved, if it's still inaccurate, if you see a problem with it, then dispute it again. Do a follow up. Nothing wrong with saying, "Hey, I don't think this is right. How did you come to that conclusion?" I mean, you can always do that.
Can I ask Bobby, Isaiah a question? Can I ask Isaiah if you're still with Isaiah, if you're still with us and you don't mind, I mean, it's kind of personal, but if you don't mind answering the question, how did you find out that it was deleted? And then how did you find out that it was back on your credit reports 2 weeks later? I'm curious.
A couple of days. Oh, 2 weeks later. Right. Yep.
Yeah. I'm curious how you found out about those things occurring. So we'll move on. And then hopefully Isaiah heard the question and doesn't mind answering it.
Yeah, if you don't mind, Isaiah, pop that in there, and I'll put it up on the screen for everybody to see here. Okay. Is it currently illegal for collection agencies to collect an amount for a hospital bill? Boy, John, you and I spent a lot of time on this back when this was the hot topic.
Yeah, it was a hot topic back like in April and May. So not only is it not currently illegal, it wasn't currently illegal in the past either. There are many debt collectors that specialize specifically in defaulted medical bills. So they can absolutely collect those debts, and under some pretty stringent conditions, they can report those debts to the credit reporting agencies. If the rules have certainly changed in that respect, but no, it is definitely not illegal for a debt collector to try to collect a medical bill. Now, obviously, it's illegal if they're trying to collect the debt that's not owed. That's a violation of the Fair Debt Collection Practice, or you can argue that that's a violation of the Fair Debt Collection Practices Act, or if you're in California, the Rosenthal Act, which is the California version of the Fair Debt Collection Practices Act. But that's, I mean, no one would argue that a debt collector is allowed to collect a debt that's not a valid debt, right? But just because it's medical doesn't mean that it is illegal to try to collect it.
Well, Bobby might be, and I'm not trying to put words in your mouth, Bobby, if it sounds that way, but usually when I get questions like this, there's some confusion about reporting and collecting. So there have been some changes to how medical collections specifically, can and cannot be reported. Maybe you can do a real quick overview of what changes have taken place. And I believe next year there's one change that still has yet to take place.
Yeah, VantageScore is modifying their models to ignore all medical collections, paid, unpaid, whatever. And that change is supposed to happen in October, but now it looks like the programming is going to it's going to be done sometime at the end of January again, unless it gets delayed again. And I'll obviously update everybody if it gets delayed again.
Got it. And then I think overall it was said that no collections will be reported for a year. Is that correct? And that
That's right.
begin. Okay, um, so that's going to right now it's 6 months, but just to help people settle up, because you know how the medical process can be, especially if you have insurance. There can be sometimes a little bit of a back and forth. So what's going to happen now is it's going to be a full year before anything derogatory medical collections are reported to the Bureau. It's got to be, what, John, over $500. So nothing under $500 is going to make it. And then categorically, just across the board, FICO and Vantage both are going to ignore paid collections. Is that correct?
Yeah, they're both going to ignore paid collections. Vantage Score is going to ignore all collections that are medical.
Okay.
Paid or unpaid. So there's, that's one of those, this in this scenario, this happens. In that scenario, that happens. But low dollar medical bills are on they're on the chopping block. They've been chopped. And then even if it's a larger dollar medical bill, there's going to be a 1 year delay from the date of the default. So, there's going to come a time when, no new medical collections will be reported for like a year. So it's going to be kind of quiet. And then like on month 12 months and then a day, it's boom. They're going to, if they're still valid and they still have a balance. Medical collections that have been paid by an insurance, will also be deleted. So there's a lot of changes that have taken place over the last few years with respect to medical debt. But they're debt collectors that still specialize almost exclusively in defaulted medical debt, and that's not going to stop. People are still going to default on medical debt. The doctors are still going to want to get paid, and as long as these debt collectors are okay dealing with the pretty extensive restrictions, then they're going to keep furnishing it. They're just going to have to take some time to do so.
Well, like anybody else in the space of trying to collect debt, that's a big loss as far as carrot versus a stick. A collection company having that stick to report to the bureaus, it's always been a big one. That's people are even though they might not fully comprehend what a collection is going to look like on their credit report. I think everybody understands that that's going to be something that will negatively impact their credit score, and that is just going to affect everything in your life. If you're going to want to go out and rent something or buy a car or buy a home, these are things that have to be reconciled. And to not have them on the credit report anymore, or not have them have that impact, I can see how the collection companies are like, okay, well, we got to figure out something else to do.
That's right. If there's, no one has ever accused debt collectors of a lack of creativity. So for every, what is it? I don't know what it's called. For every action, there's an equal and opposite reaction, whatever that is.
Yeah.
Is that the Newton's theory of relativity? But, the debt collectors are going to find a way. They're going to figure it out. So maybe they'll just start suing people more often for low dollar collections, where in the past they would just stick it on a credit report and be done with it.
I know I've mentioned this before. In fact, I saw him last week, but one of my buddies out here is an attorney for a large collection company. And that's all day. That's all he does is just prepares cases left and right. His thing is like, man, he goes, it's a little disheartening sometimes, but this is the business. This is what it is. But you know what it used to be, John, is when, you and I would look at a consumer credit report and we would see 4, 5, 6 collections from, say, Midland or LVNV or whoever, that are $50 or $100 or whatever they are, because it looks worse, even though you can probably make an argument that does the fifth collection do more damage? Probably not, But maybe what they start doing now is they just bundle them all together in a $1 amount. And now it's $600 rather than a bunch of little ones. And now that one's going to pop up on the, and that one might be worth suing for it. So they're good. Listen, collection companies aren't stupid. I mean, there's a lot of money to be made there. I've met people that are in this industry. They're pretty savvy. They're gonna figure this out.
This is very easy. It's called regression. Anybody that's taken statistics understands simple regression. The likelihood of something happening because of something else that happened in the past. Credit scores are built entirely on the not the theory of regression, but the fact or the basis of regression. If someone does a study and indicates that credit reporting has a material impact on the collectability of a medical collection, they are going to figure out, on a medical debt, they are going to figure out a way to get it on a credit report. And the bundling aspect that you just mentioned, David, is a let's just put it this way. You're not the first person that I've heard make the argument about the value of bundling versus the current, or the previous method of billing, where it's like you get a bill from like 10 different service providers and you have no idea who half these people are, but they did something. They pushed a button in the hospital and they're charging you $400 for pushing the button. And then boom, now all of a sudden you're getting a single bill for $3,000 instead of 10 bills for $300, and it's an entirely different animal. There are companies, and my niece works for one, and then a friend of mine at the gym's husband works for an entirely different one. So I know they exist because I have friends and relatives that work for them. That's what they do. They go into hospitals and they kind of take over their billing practice, and they figure out ways to make the bills more understandable. They're not doing it to make the bills credit reportable. They're making it so that the bills are understandable because of this issue of multiple billings for a single visit. But I think that's a byproduct that you have to consider is at the very least being explored, which is let's start bundling bills into one kind of master invoice. And if you think about it, that's how your credit card bill is determined. Look at your credit card statement that you got last month. It's not one purchase. You didn't get 20 different invoices for all 20 of your purchases. You got one invoice for the sum of your 20 purchases. And so it's not a foreign concept to bundle together all of your expenses and just sending out one bill.
Right, exactly. So Isaiah responded, said I checked my TransUnion's website for checking submitting disputes. Okay. All right, very good. Answers that. And he says also saw that it had been removed from my report using Credit Karma.
Okay. I was just curious if you had gotten a dispute response letter from TransUnion and then also a reinsertion letter from TransUnion, but your methods make perfect sense as well. The alerts from Credit Karma and whatnot.
And Bobby, just answering your question about how often does Credit Versio stay updated? It's every 40 days. It's got to give some time for mailing disputes and responding. And if you haven't gone through your tutorial videos yet, make sure you go through them. It'll tell you exactly how Credit Versio operates. Credit Versio is not a monitoring service, so it's not giving you blow by blow. It just brings in your report every 40 days. Here's a question that gets asked a lot. Can disputing your debt lower your score? That is a loaded question, and one that people actually think is John, I'll let you. I've answered that one so many times in my life, but I know you're going to have more of a nuanced answer. Great question, Jesse. I really like that question.
So the short answer is no, but the better answer, instead of just saying no, moving on, and then leaving you hanging like that, when you dispute an item on a credit report, really there's nothing that changes about that item. It's still there. The credit bureaus don't delete it just because you've removed it, so that doesn't cause your score to go up. It doesn't cause your score to go down. The only real influence that disputing something can have on a score, respectfully, is that your score could go up. If the item is marked as being in dispute, with the investigation and process, there's actually a code, a credit reporting code called a Metro 2 compliance condition code. And it's represented by the letters X like X-ray and B like boy. So XB, if you Google what's the effect of the XB code on credit scores, you may find some articles, maybe some that I've written about that issue. And so that would indicate that the account is in dispute and it's currently being investigated. So when I was at FICO, we made the decision that we didn't want to get in between the credit bureaus and consumers when items were potentially wrong. We didn't want to consider those items in our credit scores if there's a possibility that they were wrong. So whenever an investigation was taking place, as represented by that XB code, we would ignore it for payment history related characteristics and debt related characteristics. And so the effect of doing that is that your score can actually go up. So if you're disputing late payments or if you're disputing a past due balance, those types of things would be temporarily bypassed in the scoring process. And so your score could actually go up because of the investigation and the dispute. Now, once the dispute investigation is completed, if the item has been verified as accurate, that code is removed because it's no longer being investigated. And then the item goes back into the scoring process because it's been verified as accurate. And in that scenario, your score could go down, but it's not really going down. It's going back to what it was and really what it should be. So that's one thing. The other common myth that I see floating around in the blogosphere is that when you dispute something that's negative, like a collection, that somehow all the dates associated with that collection are updated to be the current date. And then it fools the credit scoring systems into thinking that, oh, this is a brand new collection versus a 2-year-old collection or a 5-year-old collection. And then therefore my score goes down because I think most people know that recent delinquencies can be more problematic than older delinquencies and negative information. So that's a myth. That's not true. There's only one date that is considered by credit scores to determine the age of certain things. For trade lines, it's called the date of first delinquency, or the DOFD. That date doesn't change when you dispute something. For collections, it's the date. It's actually it's called the date opened, but the date opened on a collection account is the date that it was assigned by the original creditor to the debt collector. So it's really not the date opened, because the date opened of the original account is many months or years prior, but it's the date that the collection account was open. And so that's the date that is used by scoring systems to determine the age of a collection. That date also doesn't change when you file a dispute. So your score can't go down because you filed a dispute because of changing of certain dates, but it actually can go up because of that investigation and process coding.
Yeah, that used to be a little bit of a gimmick, and one of the reasons why, if you're in the qualification process for a mortgage, because they still, and this will remain for the next couple of years, are using some very old versions of FICO that will account for the fact these things are in dispute, so you can artificially increase your score. But any smart mortgage broker, underwriter is going to see that and demand that nothing be in dispute when you're going through the qualification process for that very reason. Great question. Scott Oliver in the house. No question, just saying hi. Scott, good to see you. Bobby, yes. Okay, my apologies. Let me just put it up there real quick. What am I asking is how often does recommended dispute template? Well, it's not really a template, Bobby. The AI is reading every credit account, every account, and assessing it every time it brings in a new report, and then from there, it's giving you, it's looking for errors, and then it's going to change up whatever dispute reason it feels is most applicable to that particular account. Louis is back. Good to see you. One thing, John, how are we doing on time? Man, we're 40 minutes in, so we only got a couple more minutes left. Yeah, so that is correct, Bobby. It's an AI. It's actually pretty complex what's going on in the background. It's reading a credit report like John and I would read a credit report, except that software's a little bit better at reading data forms better than human beings are. So that's essentially what it's doing. Okay. Oh, here we go. Eric's got a question. Sliding right in at the last couple minutes. Is the date opened on the collection account disputable to get it removed?
Well, the consumer can dispute anything they
Yeah.
want, and so you can dispute. But where really, think about what you're disputing. So the date opened on a collection account is the date that the original creditor assigned it to the debt collector. That date does not hold any value as far as deletion, meaning that
So I mean, just Eric. So let's just say that I'm American Express, and we had an account together that went into default. Let's say it went into default in 2021, and I just hold on to that debt because I'm going to bundle it all together. And in 2022, let's just say in July, I'm going to sell all that to John, who owns a big collection company. So that open date is going to be the date that John now gets that debt and decides to report. It's not particularly a relevant date when it comes to anything other than when John now bought that debt. Is that about right, John?
Yeah, no, that's right. That date can be any date, and it doesn't hold any. There's no relevance to deletion from that date. The date that is used by the credit bureaus for obsolescence, in other words, the date from when the 7-year clock has to start, is the same for a collection as it is for anything else on a credit report. It's that date of first delinquency. And so the date of first delinquency on a collection account is essentially the date of first delinquency with the original creditor.
Yeah.
So if the date of first delinquency for a creditor is, let's say, June 2020, and it didn't get assigned to a collection agency until June of 2022, it's not 7 years from June of 2022, it's 7 years from June of 2020. So essentially the credit reporting of that collection can only occur for 5 years because the first 2 years have essentially been sacrificed because it didn't make its way to the credit report for 2 years after the date of the first delinquency with the original creditor.
On most, on pretty much every consumer credit report that I could think of, you're not going to see a date of first delinquency date anywhere on a collection. So you almost have to go back and manually figure that out to the original creditors. It's really tough to do. You're going to see like the open date, the last activity date, but those are not the DOFD.
Well, look, if the collection is valid and it really does belong to you and you really did default on something, an apartment lease, a credit, I mean, you probably know when you defaulted on some obligation. And so you can kind of reverse engineer the date of the first delinquency prior to it going into default. Yeah. That's the date that has to be used for the 7-year obsolescence clock.
Yeah. Yeah, when a lot of these things happen, like people go through a life event that's substantial enough to cause accounts or many accounts to go into default, it pretty much sticks with you. I mean, I can tell you exactly when mine was back in the day. Okay, coming down to the end here. Great question from Major Magics. Is it true that charge-off is considered income? That depends.
It depends. A charge-off is actually it's an accounting designation, and I realize that it's also something that shows up on a credit report, but what it really is an accounting designation, and that's when the lender has determined that they do not believe that they're going to get paid, so they have written it off as a loss for accounting purposes. If they forgive the debt, meaning that you have negotiated a settlement with them, then they have to send you a 1099. Is it C, David? 1099-C?
1099-C is taxed at ordinary income.
All right. So meaning that they have forgiven some percentage or some amount of the debt, and that amount that they have forgiven might be considered income that you would have to claim on a tax return. I'm not, and I never have claimed to be a tax prep expert. So if you get a 1099-C, anybody who's watching this, if you get a 1099-C, you're getting it for a reason. There's a reason why there's an IRS form for forgiven debt. So you're going to want to talk to your tax prep person, or if you understand how to use that to incorporate that into your own returns, just be aware of that. So that's when a charge off can be considered income.
Okay, I think we can blow these out real quick. Hey, Gregory, good to see you. Real easy one, Wilbur. How do you delete old addresses and phone numbers? Don't waste your time. Okay, does it help your credit score? No, it doesn't. It doesn't. This is a myth that John and I talk about all the time, that you can somehow disassociate yourself from accounts by removing name, address, all that stuff. Don't waste your time. That's not the way those things work. Okay, Bobby, last question. For the evening, if the info reported to the Bureau is accurate, is it recommended to pay the debt owed, or is there a way around removing it from actually paying the debt we're settling? So, Bobby, here's one thing you're going to hear me say all the time. John, this is our mantra. You owe the money, pay it.
Yeah.
I mean, settle the debt. If you signed on, as Alec Baldwin said in that movie, what's it, Glenn Ross? If you signed on the line that is dotted, settle the debt. Doesn't mean you got to pay. If it's with collections, and maybe they'll take a little bit less. Maybe you can settle it down. Maybe they don't take full dollar amount for it. Give it a try, but you're never going to hear us say, "Yeah, get it deleted, don't pay it." I mean, if it's wrong and it's not yours, that's one thing. But if you owe the money, big proponents here of paying debts that you owe.
Yeah, the debt collectors, especially debt buyers, and so if a debt buyer buys the debt, they're buying that debt and probably billions of dollars of other defaulted debts, and they buy it in bulk, and so they pay they get a big bulk discount on defaulted debt. So even though you may owe $1,000, the debt buyer didn't pay $1,000 for your debt. There's no margin. There's no margin if that's what they did. So they paid something much less than that. And so in those scenarios, I usually recommend trying to negotiate a settlement. But that's about as far as I go. I mean, I'm absolutely a proponent of if you live up to your obligation.
Yeah. Okay. Real quick, Major. That's a really good point. So a charge off is not considered income. Charge off is considered debt relief. I'm sorry, the 1099-C.
Yeah.
Technically, you've been relieved of a debt, so you're going to be taxed as ordinary income. Now, that's to the extent of my knowledge. I'm not a tax professional. I've just heard this question asked and answered so many times. I'm just trying to give you the Cliff Note version of it, but nobody sees that as income.
So there's another. Why do you think income can't be on a credit report? There's nothing in the FCRA that prevents income. That's a choice made by the credit bureaus to not include income on traditional credit reports. But Equifax sells consumer reports. It's called the Work Number. That's the name of the subsidiary, and that's what it does. They sell consumer reports that include income and work history. So I'm not exactly sure that that's accurate, that the FCRA prevents income from being reported.
Okay. Hold on. All right, perfect. And let's see. Looks like everybody's happy here. Have a great weekend, Bobby. Thank you so much. Let's see. Big Gritter. Happy holidays, you too. Thank you so much for joining us today. Okay. Let's see. Eric says thank you. Eric, let's see. Let me just pop this up real quick. My concern is that date impacts the credit score. Yeah, that's right. If it's a third collection agency using the current date, then the credit score is effective artificially. Well, not artificially. I mean, if a third collection company bought it and they're adding that as John said, that open date on there. Yeah, I mean it's gonna do something to your credit score.
Yeah, if the date opened is wrong, meaning that if if the original creditor assigned a debt to a third-party debt collector in January of 2020 and it shows up on your credit report as January of 2022, that's a garden variety credit report inaccuracy. And that needs to be corrected, obviously, primarily because it's wrong. And the effect of it being wrong is that it's making the collection look newer in the eyes of credit scoring systems. And so certainly that could have an adverse impact on a score. But that's, I mean, you can make that same kind of claim about anything that's incorrect on a credit report. It can be harmful, it can be helpful, or it can be neutral and have no effect at all.
All right, that is it. Thank you so much, everybody. Great questions. It's good to be back after a 6-week hiatus. John, good to see you, and always fun having the fastest 50 minutes on the web.
Yeah. So one more thing, I know Matt Majors. Major, the word income and salary are nowhere in the 99-page Fair Credit Reporting Act document. So I don't know what you're seeing on Google, but pull down a copy of the Fair Credit Reporting Act and Google and do a word search for income or salary, and you'll see that it's not anywhere in there. So there is no provision of the act that prevents the credit bureaus from including your salary or income.
Yeah. Yeah, I mean, Major, there's always the fun of doing due diligence, and John's recommendation is great. And at the same time, just to take in consideration, I mean, we don't have any incentive to not give you truthful information. John actually spends most of his time answering questions like this on behalf of Equifax, TransUnion, everybody who's trying to sue these guys, and a lot of expert witness testimony comes down with knowing this material. And I read the whole FCRA too, read it a couple of times. Just download it. It's easy to get, and then just do a Control F, put in income, and do your search, and you'll answer your own questions. It's actually pretty straightforward. John, thank you so much. Appreciate it, and we'll be back.
I'm glad we're back. I miss doing this.
And if you're watching this as a replay on Facebook, feel free to post a comment. I'll swing back around and be able to answer for you. Same thing with YouTube. Okay, John, good to see you. Thanks so much for answering all the questions today, and I'll see you next time.
All right, guys.